Yeah, what's going on, guys? Fucking little video for on my birthday. So pretty much, the question was, what have I got going on here? So I'm looking at the current price action structure. I'm like, what it's telling me. So obviously we've got all the green zones, the demand zones. Had another dip to here. Above 28,550, and in that zone here. The volume VSA is volume spread analysis, so you need to learn about volume, you need to learn about the volume spread correlation. So pretty much, you want to the spread is the open to close, right? And it needs to be validated by volume. So we have a spread here that is quite large with low volume, so there's probably going to be a chance of rejection on the next couple of candles, right? Here we go, spread with high volume, therefore spread here with high volume, it's valid, probably with the change of structure here, double bottom, validation by volume, and there's your retest and up, right? So on a higher time frame, the same thing would be here, so you're looking for that on a higher time frame, the validation there of the retest in the demand. SV means stopping volume, so stopping volume. So there's SC, selling climax, right? Then SV of stopping volume, followed by now the spread here with low volume. But look at there was low volume, and it was easy for the bulls to push the spread up. So that means that the sellers are done. Right, so there's a reversal structure within these candles right here. So that's what it's telling you. Okay, a little break above the range here, break, boom, up, and then we're looking for the retest into this demand zone here. So there it is there. I do remember seeing this, but I was at work, so there's nothing I can do about it. Just have to keep moving on. We have a break of structure to the upside, which is validated by break of the highs by candle bodies, not wicks. Then we have if we look at the volume price by visible range, so which is volume at a price level, we can see that here. We see a hammer there with being pushed up by the buy side, so we've got a trend line liquidity there, and here we are, we have another SV, so stopping volume, so there's clear validation on a few different levels. We've got, volume validation here, so above average volume, hammer. We've got the volume price by visible range, also aligning at a confluence point there, so, this is a good order block for a long. This one here is not that good, like, weak volume there, just easy push there, so it was easy for the bulls to push there. The bears, there was no push from the bears at all in this candle. So they pushed here, they clearly got out, and bulls are pushed up again. So there is a fair value gap from here to here, so that can be filled. And now it's wicks only on the highs, so there's no valid break of structure. Therefore, we're in a range. That's a valid range, and until we get like a proper break of structure by candle bodies, right? Then this order block here is it's liquidity. Like there's stop losses here now. So there's low volume to going up, right? Price is sort of just wavering in here, and until we have a clear direction, which will be, in my opinion, I reckon we could get a break of these lows, take them out. Bears may push here, but here and here is pretty strong. Let's see. Yeah, so there'll definitely be some liquidity in this demand zone, which isn't backed by volume, so it's not backed by volume. It was easy to push through, but it's really faltered. There's been an impulse and a return and a weak push up. It is the weekend, but so can't. Weekend volume and the different exchanges as well. Like this is only Bitstamp. I usually look at another website to see all the exchange volume, so all the inflows and outflows, because they use arbitrage, just to see whereabouts the buys and sells on each exchange is. So that's what I'm looking at here. So I'm looking for price action validation, and we haven't got too much. Sometimes I like RSI. There's nothing wrong with RSI. I think it's actually pretty good. We've got equal highs there, high and high. So, what is that? Go there. So we've got a bit of a low there actually, and on that one. So it's a bit bearish there in terms of the highs. Yeah, we can see that. So a little bit of bearish divergence. Not much. It's obviously not strong, but clear reversal here. So TR trend reversal. But otherwise, yeah, I'd be staying away from this demand zone, this order block here. So, and if I was looking for deeper liquidity, I'd be looking for here for a long. Here for a short, we have to look a bit left to see what's going on here. So there's not too much. I wouldn't be surprised if we do see a continuation up, sort of to the break. So that way there you have that break, slow burn up, getting to the retest area. We've got a buying climax there. We can measure the impulsive move with fibs. So it's still got a little bit of room. Look at that. You got the 618 aligning with almost the break and retest area, which is pretty good. So we might take out those highs just to push a little bit more. But in between the 50 and the 60, a lot of traders see that as the golden zone. So for continuation into the trend direction. In this case, there's no trend. Like we're ranging. We're really ranging. Pretty sure we can see that. So clear up all this. I don't like having too much on it. Just here and there. You know what I mean. Otherwise, majority of the time, the Asia session highs don't apply to Bitcoin because it's 24/7. So the Asia session is for forex. But yeah, like I said, we're ranging until one of the big zones break. So we're wanting to break these highs or these lows, and we'll be going lower. If it is a Wyckoff accumulation phase, yes, this is phase B, and I'd be looking for. Now I did see something that there was a big influx from private wallets to exchanges. So usually, if there is whale activity from big wallets to exchanges, there could be a dump happening. And if there does a dump happen, then they'll be looking for a big spring, which will give the selling climax here and a big spring down, and then a big reversal back up. So because when you're whales, there's an advanced concept where they will push the market down, and they all of them are are in profit. I think like 60 or 40%, one or the other is in profit, and the other one's in red. So they're trying to shake the tree to get cheaper Bitcoin. So they're happy, and they've already calculated how far they want to push the market down. It's an easy calculation of how much they wish to sell off, to push it down. They have plenty of tools at their disposals, and they're happy to put big orders here. So they'll sell off just to hit their own orders and go back up, because they're hoping by selling off and then pushing down and grabbing cheaper Bitcoin that the market will rally behind them after they've bought it, So that's the concept behind it anyway. And as for anything else, really we're just looking for, if you want to trade the range or you want to trade the trend, then you can. Remember, this is a bear flag. So on the 15 minute, on the 1 hour, and on the 4 hour. So you've got massive impulse there. You know, it's pretty looking pretty dark. Could even refine the fib to the 4 hour impulse here. Yeah, there, it's all right. So now you got the 618 at 29,587. So you got multiple time frame confluences of the bear flag. So, you know, you got traders on the 4 hour, a trade on the 4 hour, traders on the 1 hour, traders on the 15:30. They're all seeing the same thing. So you got multi-time frame confluence in patterns, and plenty of other things like so liquidity zones, demand zones, supply demand, breaker structure, market structure. Yeah, let's see what's the daily doing. The daily's just like it's pretty. It's arranging up, and then you got your rejection area here. So 30 at the body, 34.52 at the high, 36.75. So if you're a day trader and you're looking to just trade the dailies, you know, you'd be shorting from around. You're trying to find that short liquidity here, and you know, just take profit like around in the liquidity zones here. So on the smaller wicks, you don't want to use the bigger wicks, otherwise you got a higher probability of price coming down and coming right back up and taking you out. So yeah, looking for the liquidity on the smaller wicks here, and then aiming for them would be more higher probability trade. You know what I mean? So otherwise, you know, if you're looking, people looking to fucking take profit here, just like it just doesn't make any sense. Like, look at the buyback. Even though it's red, it's still the buyback. Doesn't matter if it's red or green. You know what I mean? But it does leave a breadcrumb trail. You know that, yes, look, price can push down there. So in a lot of people's, a lot of big trader eyes, like they can see this and they can see, oh well, prices come here before, it can return. So, man, let's have a look. We've got that now. Obviously, on the daily candle, look, we've got a breakout of that trend that was forming on like the 4 hour and the 1 hour. So that's interesting. And we look on the daily, and it's actually closed out of this area. So, but yeah, I'd be looking. Yeah, it's just. Obviously, it's the weekend, so volume not going to be that great. But volume can always be hidden because of arbitrage with Bitcoin and crypto. So you got to be aware of that volume and price action can be manipulated because of the arbitrage. So, but I think that's it. Have a good day.